Tuesday, August 10th, 2021, Monaco 64, home of alternative economics and contrarian views. So the IMF is to issue $650 billion worth of who owes you nothing SDRs. Yes, I spoke about this in April of this year. I did a video on this. I'm going to put it up in the cards below in the description. These SDRs are actually going to come out into the world. They're going to be conjured up out of thin air, $650 billion on the 23rd of August. Lynette Zang, who I've had on this channel a few times, I've been on her channel a few times. She did a great video yesterday about this. It's entitled Crisis at the IMF. I highly recommend you watch that one. She talks about this. I hadn't seen it, that the IMF was going to do it on the 23rd. I spoke about it in April that they were planning to do it, but on the 2nd of August, there was a meeting at the IMF and they finally put it through. And Lynette really goes through the history of the SDR, through what's going on, through the previous issues of SDR, and how this $650 billion worth of SDRs is a huge step up in their move to probably control the world monetary system. I think that's their goal. As she said in her video, they were looking to use the SDR as a global reserve currency when they founded it in 1969, and that's the IMF, of course. But then Nixon and Kissinger got the Saudis to play ball and create the petrodollar. So the SDR went into hibernation for a while, but it's back. And yes, they're creating that $650 billion in one day, not like over the month, how the Fed does. So it's a lot of liquidity, as Lynette says. And I wanted to go over John Exter's piece that he wrote in 1972 for the American Institute of Economic Research. And this is a great small piece that he wrote. And it's more relevant than ever as we approach Sunday this week, which is August 15th, of course, which in my opinion is the beginning of fiat money inflation in the world, not just in France. And yes, in France, it took about 6 years or 7 years for the whole system to implode. In the 20th and 21st century version of fiat money inflation in France, or fiat money inflation in the whole world, it's been going on for 50 years. So I think it's about time it ended, hopefully. But be as it may, John Exter, of course, writes about currencies today are IOU-nothings. And that was in June of 1972, just under a year after Nixon really, what he did was default on the obligations of the U.S. Treasury, gold obligations. They call it closing the gold window, of course. But yeah, he talks about how the dollar became IOU nothing. But more interestingly, as it pertains to the SDR, this is what he said. In recent years, there has been an attempt to substitute so-called paper gold or special drawing rights, SDRs, in the International Monetary Fund for real gold. So it's just as bad as the fiat dollar, of course. The SDR is made up of a basket of fiat currencies, of IOU nothings, like the dollar, the euro, the Japanese yen, pound sterling, the Chinese yuan, and I think maybe the Swiss franc, the Swedish krona, maybe the Canadian dollar as well. And they can add all the other world currencies to it as well. And we'll come to that in a minute. So John Exter continues, one high IMF official is even reported to have called gold metallic SDRs. So they're the precursors to the COMEX futures contracts, right? If used seriously, such an appellation flies in the face of marketplace assessments of store of value money. John Exter is not a kook or conspiracy theorist. This guy helped found the Sri Lanka or Ceylon Central Bank. He helped found the Philippines Central Bank. He worked for the New York Fed. So let's continue. The SDR has no obligor, no promise to pay any store of value money at a fixed price, and no fixed maturity dates other than a complicated reconstitution provision. It cannot be sold at will, only by central banks in deficit and only to central banks strong enough to be designated by the IMF to receive them. So it is, according to John Exter, a who owes you nothing and when. And it does not even pay a market rate of interest, only 1.5%. If central banks ever monetize them in insignificant amounts, they will have moved from days when they issued their IOUs principally to buy enduring store value money like gold to these days when they issue their IOU nothings principally to buy government IOU nothings, 2 days when the world would issue IOU nothings to buy who owes you nothings. So it's getting even worse. The SDR is a step even further away from real money because I owe you nothings become who owes you nothing. So no, we don't even know who this money is owed to. It's just really printed out of thin air. There's no borrower and lender. It's just created out there. Can you imagine how inflationary that's going to be? And of course, Lynette Zang points out that the IMF says that it's not going to be inflationary. Well, it's going to be the opposite. You can never trust these international institutions, of course. In days to come, international monetary reformers will have to consider whether these new kinds of money will produce a stable monetary world. In the world's marketplaces, will they hold their value against goods and services in general? I don't think so. More particularly, will those issued by different central banks hold their value against one another? Most particularly, will any of them hold their value against store of value money like gold? And that's what Lynette Zang was saying. Is it any wonder that since the IMF has confirmed the issue of these who owes you nothing on August 2nd, and they confirmed that they're going to issue it on August 23rd, is it any wonder that gold has been hammered along with silver, paper gold and silver, of course. And by the way, yesterday I did buy a little bit of gold, not that much, only half a sovereign, which is half of a quarter of an ounce. So about an eighth of an ounce of gold. The premium was still quite high, but I did my part. I got rid of some spare fiat. I wish I could have gotten more, but as I've said before, only buy as much as you can afford, or exchange only as much fiat as you can afford for real money. So let's look at what the IMF said in its press release. This is from August 2nd, of course. And the video I made about this was on April, I think, let's have a look. It was April 3rd. So they announced this on April 3rd, and now it looks like it's gonna go ahead. So it says here, IMF governors approve a historic $650 billion SDR allocation of special drawing rights. August 2nd, 2021, Washington, D.C., the Board of Governors of the IMF has approved a general allocation of special drawing rights equivalent to $650 billion, or about 456 billion SDRs. As I said, one SDR is worth more than $1. The exchange rate doesn't mean it's better than the dollar, it's just the exchange rate. On August 2nd, 2021, to boost global liquidity. So, yeah, Lynette is right. If there wasn't a crisis, why would they need to boost liquidity? She also points out that the banks' balance sheets have grown from like 4.9 trillion in '08 to almost 31 trillion now, and they need even more liquidity. This is a historic decision, says the IMF, the largest SDR allocation in the history of the IMF and a shot in the arm for the global economy at a time of unprecedented crisis. So yes, Lynette is right. We're still in a crisis. And she points out that in '09, there was a big issue of SDRs, and it was about 140 billion SDRs, not dollars. And this time it's 456 billion. So everything's getting bigger. This is just a QE of something that we don't even know who's borrowing. Like John Extra said, it's truly amazing. We're really going down the path, as Lynette said, of hyperinflation. And I have to admit, I find it hard to imagine hyperinflation because everything seems so under control still at the moment. But I think that's the trick about hyperinflation. The SDR allocation will benefit all members, address the long-term global need for reserves, build confidence, and foster the resilience and stability of the global economy. It will particularly help our most vulnerable countries struggling to cope with the impact of COVID-19 crisis. IMF Managing Director Kristalina Georgieva said, while she's also on the board of the World Economic Forum. So these people are all working for the same team, the globalist team. The general allocation of SDRs will become effective on August 23rd. So there you go, August 23rd, 2021. The newly created SDRs will be credited to IMF member countries in proportion to their existing quotas in the fund. So here's the interesting part, because they're saying it's supposed to help the poorer countries, and they say about 275 billion. So of the new allocation will go to emerging market and developing countries, including low-income countries. So the other 375 billion, of course, is going to the G7, to the rich countries, which seems unfair, I would say. Not that I think this is a good thing, but if they really needed help, these countries, you'd think they give them all of this, because the rich countries, they've created their own liquidity through their central banks, and their currencies haven't suffered as much as currencies like in Brazil, or look at what's happening now in Lebanon. That country is falling into chaos. Hyperinflation is really kicking off over there. So there you go. I'm going to stop right here. So I agree with Lynette 100%. And it would be crazy right now to get rid of your physical gold and silver, or any time for that matter, until we go back to a world where institutions like the UN, the BIS, the IMF, the World Bank, all these big international institutions are gone, and they're trying to run our lives. We need to stay in gold and silver, because they're going to try to impose or keep imposing these phony fiat currencies on the public. And there's only one way these currencies go, and it's always to zero. And this is just a huge move here. Yes, SDRs have been issued before, but not in such amounts. And I think Lynette is right. You need to hold on to your precious metals, because it's going to get even crazier. There is a crisis. It's not over, as Lynette said. So with that, let's quickly look at where the markets are this morning. It's 9 a.m. London time. I'm a little later today, but that's okay. Billy is here. He was here yesterday. Someone said, oh, where was Billy? Well, he was here all the time. You got to look carefully. He is asleep. Some people who are new to the channel thought it was a cushion, that Billy was a cushion. But he's been up already this morning. He's been outside already in the garden, and we're going to go out for a walk later on. So we've got spot gold up $5 at $17.35. Range has been $17.28 to $17.38. So pretty narrow range, not a $100 range like yesterday. Spot silver is up 10 cents at $23.54. Range has been $23.69 to $23.40. The Dow future is down 20. The Nasdaq is up 14. S&P future is unchanged. Currencies are quiet again here. Sterling is up slightly, 138.53. The euro is unchanged, 117.29. This is all versus the dollar, of course. And the dollar is up 0.1% versus the yen at 110.45. The dollar is unchanged versus the yuan at 648.32. Aussie dollar is unchanged, 73.31. And the Canadian dollar, or the dollar versus the Canadian dollar, is unchanged as well at 125.68. WTI crude is up almost 2% at 67.61. Yeah, I think commodities are still going to go a lot higher. I think this issue of SDRs is going to pump even more liquidity into the system. And what happens with this $650 billion is that in our current fiat currency system, in our fractional reserve banking system, that $650 billion, you can multiply it a few times, maybe even 10 times. So you do the maths. High-grade copper up 0.2% at 431. And to finish off, we're going to look at the pretend 10-year yield. It's not real, of course. It's at 131, so I think we were at 130 yesterday, so very stable. The 10-year yield, of course, it's highly manipulated by the central bankers. There you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.